Hi everyone, today's video is going to be about Activision Blizzard, a company that's been in the news quite frequently recently because of, a number of problems. And this is reflected in the stock price. It's down 17% this past year, and that is from highs during the year of around $105, something like that, to now 62, so greater than 30% drop. Some serious scandals and some just okay results. What I want to establish is it oversold, or is this an intrinsically broken company that is going to be a long-term underperformer versus the market, or is this a rare opportunity and are the problems quickly fixable? Before I go any further, I'd appreciate if you could like and subscribe to the channel to keep it growing. Thanks. Moving into what the allegations are, basically the problems in the company are basically that there was some sexual misconduct allegations that are not uncommon, unfortunately, in the video game industry. But particularly worrying is the general workplace culture, and the fact that CEO Bobby Kotick may have knew about these. Well, allegedly, is facing allegations of being aware of this sexual harassment incidents at Activision Blizzard and failing to act appropriately. There's been lots of news regarding toxic workplace culture, particularly at Blizzard, I think, and there is likely to be a big change in management coming. There's currently a shareholder rebellion ongoing. Some 110 employees walked out of Blizzard's headquarters in California. This is a serious issue, and this going forward, this could really harm Activision Blizzard's plans. They could lose employees. It could dramatically affect the pipeline going forward. They could struggle to attract strong engineers in the future, or just employees in general. It's definitely serious. I think from a shareholder perspective, the faith in management, particularly the CEO Bobby Kotick, is just not there anymore. So at the minute, the shareholders are demanding that Bobby Kotick resign, Brian Kelly and Robert Magano, two of the longest serving directors, to retire by the end of the year. Basically, this is just they want to completely get rid of the old guard, to say, and replace it with a new management culture and a new workplace culture. And I don't think that's an unreasonable thing to do. I think he is not a bad CEO from a stock performance wise. It's been a good stock to own over the long term, but this just cannot go on. And like I said, the faith is gone. And once your reputation's been damaged, I don't think there's any coming back from this. I think the CEO and some of the upper management team just have to go to stop some wider problems. So with that being said, if the CEO and the management team were to leave, then this could potentially be a rare buying opportunity if this happens in the near future. So if we're looking at purely a financial perspective, then we can look at Activision's key pillars for growth. They're looking at expanding the audience reach, so that whether that's gaining new players, increasing acquisition, but of new companies. They bought King many years ago. Maybe they're doing more acquisitions, increasing player investment, and deepening the engagement of the current players. So Activision Blizzard is roughly split into three segments. Activision, so that is Call of Duty basically. Blizzard, which is World of Warcraft, Hearthstone, Diablo, Overwatch, some big franchises in there, and King, which is Candy Crush and Farm Heroes. So each of these operating segments did pretty well. They have strong margins, around 40% operating margins for each of them. They're all bringing in a large amount of income. There's some positives year to date. Activision's been re-releasing some old IP in the Tony Hawk's Pro Skater franchise, but Activision is really the key driver for me. Call of Duty is one of, if not the biggest games franchise in the world, particularly on consoles. And Call of Duty Vanguard sales were down 40% from the previous installment, Call of Duty Cold War. And I think there are questions around, can Warzone keep its player base? And we saw big streamers like Nick Merckx and Courage JD. They were leaving Warzone halfway through the year, basically because the studio engagement wasn't there. They weren't fixing the cheating problems and bringing out an anti-cheat like many other games have. And makes you question is, despite the size of Call of Duty, can they actually keep Warzone as a competitive offering? We've seen in the past with games like PUBG that it just loses the player base over time because of dissatisfaction with things like cheating. And I question whether Activision are going to do that, particularly with the situation at the moment. Is can they spur engineers? if they're potentially losing work staff or losing time. Basically, we're already seeing problems with the pipeline. So this is definitely a worry. Saying that, the revenue, if we're looking at it in a purely financial sense, the revenue for all the segments is pretty good. King and Blizzard grew 20% year over year. That's against tough comparisons versus 2020 when a lot more people were at home. Call of Duty was roughly flat, but again, that was Warzone really was the game of 2020, so that's kind of to be expected. But definitely not a positive result. Negative, but I guess it's fair enough against a pretty rough comparison. So looking at the general results, net revenue was expected to creep up to a small amount by like $26 million, and it slightly beat expectations. This is not anything to shout about in my opinion. The revenue growth is pretty poor. One positive is that the profitability increased quite dramatically. So earnings per share up quite a bit. Again, nothing to shout about. They were expecting an earnings per share decrease, and they just beat expectations. But still, when comparing to 2020, it's only just a beat, and I mean only just. So tough comparisons definitely, but these are merit results at the very best, not good. Low growth versus 2020, even though they exceed expectations. The increase in profitability is nice, but that revenue growth is just not good enough in my opinion. So this is what I've kind of alluded to, is that the pipeline problems, I think these are only going to get worse with the staff walkout situation and potentially losing staff. Overwatch 2 and Diablo 4 are going to be launched later than previously envisaged. This pushes growth out a bit further away, was part of the reason why the market generally thinks in the short term. So there's been a bit of a hit basically because of this. I don't think this is the end of the world. If you have a long-term view, then you will believe that the profits and revenue from Overwatch 2 and Diablo will get here eventually. Overwatch 2 is likely to be a huge game, but I question if they can keep delivering on this pipeline, if these pipeline issues are going to just disappear, which they seem to allude to, but I don't particularly believe. Looking a bit deeper into the actual numbers, they have a strong balance sheet. I mean, particularly strong versus historical comparisons from the own company. Its operating margins were some of the best it's ever been, as its net margin, return on equity. These are some of the best versus its own historical values and versus the industry. Cash today is strong at 2.69. It's relatively easily serviced. It has good interest coverage. It has good debt to equity versus itself. Not great for the industry, kind of middling. Again, these are strong numbers and suggest that it has a resilient balance sheet and can survive through tougher times. And it did particularly well in 2020. So I think these are, you see that the websites gave them 7 out of 10 and 8 out of 10. I think these are completely reasonable and show that it has a strong balance sheet, good margins, good debt situation, and is generally financially better than the wider industry, and particularly much better than it has been in the past. From the more general valuation metrics, PE ratio of 18, which again is much cheaper than its historical valuation by most metrics, versus the S&P, with this roughly half the S&P's PE ratio right now. It's going to get even lower next year at 16. This is cheap. There's no way to put this. That is a low PE ratio, and it's definitely factoring in the current problems. I think maybe this suggests that it's a bit oversold, because you look at the prospects of Activision Blizzard over the long term. If it can execute and get away from these management-related issues, this is a strong company at a relatively cheap valuation. I think this is particularly well shown by this brief little DCF calculation I've done. So this calculates a fair value of $94 and a current stock price of 62.5. I mean, that's a 33% margin of safety, and it accounts for roughly 50% stock growth over the near term. This is a great fair value, and again factors in that the management. This is from purely financial metrics, so it doesn't really factor in that management is creating a toxic work environment. And if these claims are solved quickly and the work environment is improved and management replaced, or the problem is solved, then this could be a steal and this could be a rare buying opportunity. But I think it's a complete gamble at this stage. I'll be looking out eagerly on the news to see what's happening with Activision Blizzard and see where it's going. I think making wholesale changes to your management structure not necessarily good in the short term. It might cause a weakening and a bit of lack of organisation, but I think in the long term, this is definitely something Activision needs to do. And I think if Activision does this and it stays around these prices, this could be a really strong entry point. And I think it could be a good hold for the long term, provided it executes and does all these things. So just to reiterate, absolute gamble at this stage. I think it's basically a coin flip. If they manage to solve the situation, I think this could be a really good buying opportunity. So I'm firmly sitting on the sidelines, keeping it on the watch list and keeping my ears pricked up for some news. Thanks.